Hi, good evening. Today is Friday, January 29th. S&P 500 fell another 2% and suffered the worst week since October, closing at 3,700 after falling 90 points from the highs made after hours. It had a 40 points rally around 1 o'clock, 1 p.m., but failed to close at the high and closed at the low of the day after selling off 30 points. Nasdaq was also down over 300 points, over 2.2%. The mood was very pessimistic at the end of the day, and people are saying that after a down Friday, a down Monday is also very likely. Maybe Victor has some statistics for us on that later. The GME saga continues today, and it claimed yet another victim. After 20 years of publishing his research, Citron will no longer publish short reports, only long reports. They got intimidated by the Wall Street bros. And they were the ones who started the original GME short squeeze by publishing their target at $20. Well, GME closed today at $320, up another 70% of the day, and the fever seems to continue still. It was high as 450 today and 513 high yesterday, very far away from the $20 target. And Robinhood, the infamous broker, seems to be having liquidity issues after their traders flee to other brokerages since they restricted trading on many stocks. Robinhood CEO is doing damage control today, the whole day on CNBC, Bloomberg, CNN, saying that they don't have liquidity issues, but an hour later raising $1 billion from more capital from investors. And they still need a lot more money in regulatory capital. But they keep limiting trading, so more traders exiting their platform. So it's kind of like a death spiral for them, at least the beginning of it. They limited the numbers of trades to such a small number, it really is absurd. You can only be long one share of GME on Robinhood. Absurd. 10 shares of AMC, 2 shares of Bed Bath & Beyond, and 1 share of COS. So it's pretty much might as well say that you limit the trading. This 1 share nonsense is just absurd. Meanwhile, in Miami Beach, on the fun story of the day, there was a plane flying all over the beach advertising buy GME stock. That's the meme culture we live in. And the YouTube person who was behind the GME squeeze on Reddit was unmasked today as a 34-year-old financial advisor. He has allegedly invested $53,000 into GME in September of 2019. And now his position is worth nearly $48 million, according to him. Another casualty of GME was Facebook banning Robinhood Stock Traders Group, which had 157,000 members. So apparently no free speech for the people. But I wonder then why the hedge fund idea dinners are still legal. Isn't that kind of the same thing? If we're cracking down on manipulation, I don't know, shouldn't we close that as well? And lawsuits are coming in. Attorney General from Texas is requesting lots of information from various brokerages, TD Bank, E-Trade, obviously Robinhood, Citadel, Discord, Interactive Brokers regarding this suspension of stock trading. So we'll see how that ends. And Senator Warren is also requesting that SEC take steps to ensure prices reflect fundamentals. Let that sink in. Fundamentals. What does it even mean? I mean, is Tesla price right now based on fundamentals or assumptions, expectations for the future? What are the fundamentals? I mean, I imagine Tesla price is correct because Nancy Pelosi owns lots of Tesla calls, so it must be based on fundamentals, unlike GME stock. And I wonder why Senator Warren never cared about Elon Musk tweeting shorts when he was causing short squeezes on his own stock. that didn't matter. Or when he tweeted that funding secured, or his infamous 420 tweet, nobody cared then. She said that casino-like swings in stock prices of GameStop reflect wild level of speculation that don't help GameStop workers or customers and could lead to market instability. Today, I told the SEC to explain what exactly is going on to prevent market manipulation. So I'd like to know if being long GameStop doesn't help workers or customers, how's being short GameStop help? Especially if the short interest was 140%, which is basically more stock was shorted than actually in existence. So how does that help the workers, Senator? And also, AMC is actually an example where perhaps the retail saved the company. By trying to lift the AMC stock price, we may have lifted AMC company from the bankruptcy. But either way, should we just set the prices like we do in USSR? I mean, we're going to have price setting now by senators. Even Tucker Carlson from the Fox News was talking about GME stock. If that doesn't show us that we live in a meme times, I don't know what does. He had Dave Portnoy on, who was complaining that the same story that now is becoming very famous on Twitter, that Citadel is the real customer of Robinhood because Citadel actually buys their order flow and front runs their clients. And now that they were short the stock, they paused it and let hedge funds try to figure out how to deal with their short positions. And I'm sure we have many people, listeners who listen to us, who were actually in a similar situation where they lost a lot of money by being positioned wrong. And nobody paused for us, but somehow they needed to pause for the hedge funds who already have access to way better leverage than retail traders. So I'm not sure how's that helping the sentiment. And the Wall Street Bets Army is now 6 million users. It's up 2 million in the past 24 hours alone. So the Robinhood army grows and the meme market continues. The joke cryptocurrency, Dogecoin or Dogcoin, I'm not sure how to pronounce it, it was created as a joke and it was up 800% today after Elon Musk tweeted a picture of a dog, which his followers, of course, interpreted as an endorsement of this dog coin. And then Elon Musk, if you want to call it, manipulated the Bitcoin by pushing it up 15%, saying that, tweeting that in retrospect, it was inevitable. Apparently, he was referring to Bitcoin because he has changed his bio description to only one word, Bitcoin. And so by this one tweet, he has lifted the market cap of Bitcoin by $80 billion. And so, of course, people are wondering if Tesla is going to buy Bitcoin next and replace the cash that Tesla has, however much it does, with Bitcoins. Is this manipulation? I don't know. But we live in a world now run by memes and famous Twitter personalities. It all has started, I think, with Trump tweeting about stock market incessantly and encouraging people to speculate. And with Elon Musk also tweeting about his stock, taunting the shorts that were trying to short his stock and constantly causing short squeezes. So now that we live in this world, I don't think you can turn back the page. Any public person with millions of followers can just tweet one word and move the market in the billions. Can this ever be changed, enforced? How do you ever prove it's manipulation when a tweet is just one word? Or like in Elon Musk, it's just the change of his title on his Twitter page. We live in a super connected digital instant information world where the rules of the game, I think, have been changed forever. And now the regulators will just need to update the regulations to reflect that somehow, or continue not enforcing them as they have been. Victor, what do you make of all of this and today's sell-off?
There's so much news today. You could write an opera
Yes.
about it. Let's try to think of some general principles that put things in order. First of all, the public has been making money consistently for 4 months. As you pointed out, Robinhood has 500,000 new customers. Everyone you talk to wants to buy stock. And the people who sell the stock to them are the brokers. Now, if the public is winning, then the existing holders or the brokers are losing. And there's a rule, an unbeatable rule that the house cannot lose money. So in January, there were 5 new highs, and 35 to 40% of the days in 2020 were new highs. So the public was buying. They were buying little stocks. They were speculating. They were buying. It's true that there was some of them who bought the penny stocks, but that's a small part of what the public was buying. Most of the public buys baskets of stocks or the S&P 500 stocks or the Dow 30 stocks. So the public was buying, they were making money consistently, and they had to lose. We've said that many times. When you have public buying like this in a frenzy. However, the idea that the public, that a market that's going up is going to go down is untrue. Now, you asked me, there was a lot of talk about the January barometer.
Right.
Now, January, it started out at 37.50. Now it's 3,700. So that's down 1.5%. And in the previous 3 months, it was up about 15%. So it's a very small decline. It's a small amount of money for the public to have lost in January. Now, I looked at the gist of the January barometer is that the market follows January. Market goes down the first day, goes down the rest of the year. There's a smart bet in basketball that the team that scores the first point actually wins about 58 or 60% of the time. But looking at Most of the time January is up. Looking at the 4 times in the last 10 years that January was down, 3 out of the 4 times were up 2 months later. I'm sure the expectation when January is down for the remaining 11 months of the year is quite positive, as all long drifts are in this market, and market can't go up 50,000-fold a century without it being bullish when the market's down, bullish when the market's up. Now there's another, aside from the fact that the house cannot lose and the public cannot win in gambling, you must think that the purpose of markets is to drive prices to a level that will create the most vig. When the market is topsy-turvy, the brokers will either increase the spreads so that you get lousy fills, or they'll limit the buying. As discussed yesterday, the same thing that happened to GameStop happened to the people who were buying silver and making a fortune at it. The members got together, including my best friend, Irving Riddell, and they decided that the way to solve the problem was to ban buying. And the same thing happened to Robinhood. Now, apparently they came up with there were all sorts of litigations both ways, which of course the members won. Eventually, Hunt had to pay. Not only did they ban him from buying, but he had to pay 40% of the losses that all the silver shorts had. Now, Robinhood apparently got some advice, and they said they weren't going to limit the buying, but they limited it to buying 1 share. So there was a face-saving way of saying that they opened the market. Now, the market tends to gravitate to levels that will create vig. And where people have stop orders and where there will be large spreads. One notes that the VIX is up again at 36 or 38%, and the higher the VIG is, the greater the spreads between bid ask. Now the market started out around 3760, 3750. Was down about 1% at the open, but It was a down 3% from Friday's 3 o'clock price. So it went down from 13.20, from 37.20 to 36.80. So there was quite a bit of a move. In fact, from 38.20 to today, 160 points. It's a nice 5%, nice 5% move from Thursday's 3 o'clock to today's close. So in fact, there was enough moves today to make a person's whole year. There was actually more. The market today was like an icon of the whole year's move. It opened at, as I said, at 37.50, 38.50. But then there was consumer spending that was reported, and the market immediately went down to 37.30, and then in a minute it was back up to 37.70 because consumer spending was down, but yet it was down less than had been anticipated. The NASDAQ was relatively strong all day. It opened around 13,100. Overnight, it had been as low as 13.80. So that was a nice 1.5% swing, but it came back. 13,100 was a constructal level, a gravitational level, and also a level that creates the most VIG. And then all day long, it flirted with 13,100. It started the year at 12,850. So it was up about 3%. But then it quickly went down to 3,000, then down to 2,900, then back to 3,100, then back to 3,000 at the close. 13,000 at the close. So we saw a lot of constructal news today. A lot of the S&P broke the constructal number of 3,700 at the close. It was as high as 37.40, so it dropped another 1% at the close. But that's, and there were a lot of SOGI numbers at the 50s. Whenever it got below 50, it quickly went above. Then when it was above, it quickly went below. Now there's a constructal number at 3,700. And that was broken. Now you asked me what happens when Friday is down, what happens to Monday. I should know that because 50 years ago, I wrote a paper on it called the Friday Down, Monday Down effect. And in October 19th, 1987, there was a vivid decline of the market on Friday. Went down about 2 or 3% on the Friday and then went down 20% on the Monday. Ever since then, the Friday down, Monday down effect has not occurred, has not been valid. People remembered that when Friday is down, that they would sell on Monday. They're thinking the same thing. In the last year, when Friday was down, by Tuesday's close, the market was up 80% of the time.
Right, but what about Monday open? Do you have statistic for that?
Yes, I have statistics. Monday's open is down about, there have been 32 occasions where the market was down more than a third of a percent on Friday.
What percent? I'm sorry, couldn't.
Well, I don't like percentages because the market is fixed so that it's the algebraic change that matters much more than percentages, because that's where the margin is created. I mean, if it goes down 30, that's $1,500 of a loss. Margin is 13,500. The margin once you have a position is about 8,000. But if it goes down like 50 points, that's $2,500. 100 points is 5,000, and that's when people get their margin calls. So the market moves to create margin calls, to create churn, to create wide spreads. Anyway, I looked at when the market was down 10 big points, S&P down 10 big points. It's happened 32 times. By the end of the day, on average, 5 out of 8 are down. That would be 20 up and 12 down by the end of the day. By Tuesday's close, the market's up 21 out of 32 times. On average, it's up 13 points now. When the market was down 30 points or more, same results for actually by Monday's close, the market's up 35 points. That's up 3/4 of the time. There could be a down open, but it'll be a time for buying because the market's below a round number. And just like the Soji level at the 50 causes it to go up, the 3,700 number will gravitate it up. In addition to all the terrible news that you spoke about in the unusual aspects, now remember that's the norm. There's always something crazy about the market, as one of most of the commentators are saying. Well, it's hard for investors to really get a feel for whether it's going up or going down. You know what? That's always true. But what's unusual is the attention that people are paying to the market. I don't know that that's bullish or bearish. In fact, the more attention, the more people put their wealth in the stock market, the better it will be. But there are some funny things happening. That the public has a lot of common sense, actually. If you talk to the average person, they're turned off by the fact that there's so much suppression of news now. And in my day, there was a toy called Boppo. And whenever anything was bad, you would knock Boppo down. And Trump is playing the role of Boppo now. I noticed that every bad thing that's happened is attributed to Trump, including Robinhood. I saw several commentators saying that the reason Robinhood was bad is because Trump sort of fostered a culture where the little guy was against the big guy, where he was against the big companies, and he was all for the common man, and people took that approach to the stock market, that instead of let the common man be paying his dues to the big man, or as I put it, to those on the lower trophic level, to be providing food for those at the higher level, they decided that they would try to take on the big boys, that they try to make money. They'd go against the grain. And of course, there's a lot of talk about how some of the people in GameStop made billions of dollars. But most of the people who got into the market have lost. They lost heavily today. They lost heavily in the month. Now, in addition, in New York, there's an explosion of criticism against the governor because he didn't report the number of deaths in nursing homes from COVID.
Right.
And guess who he blames for that?
Trump, of course.
Yes, he blames Trump. Boppo.
Right.
So now the public is smart enough. They don't like the fact that Paul was closed down and that the big social media techs are suppressing non-woke thinking. They don't like the fact that they don't hear anything about Hunter Biden or the brother or the cousin. And they don't like the fact that, I mean, when Kerry, and I noticed that the head of Robinhood has a haircut that's modeled after Kerry. When you go to Washington, there's a satire that's been playing every day for the last 15 years, and they have someone with a wig that looks exactly like Kerry. But do they really think that the public is so foolish that, all right, they lost 11,000 jobs in the Keystone by banning. Well, Kerry gets on and says, it's not that you lost, the reason you lost your job is because you're not making solar panels. You were just in the wrong industry, and that's the way the market works. I mean, no one believes that, and it creates a dissonance, a cognitive dissonance that creates a very bad backdrop for the culture. Now, I could go into about 100 things that are not cricket. The main thing that's not cricket was that the public was making too much money. Now, hopefully they've paid their dues so that it's ready to go up, and by Tuesday, I think we'll see a very substantial rise. I've mentioned many times that the sports betting is a lot more intelligent. There's a lot more quantitative work than on the stock market. And here's a typical thing. I like this one a lot. Following these betting rules should have you flying high on Friday night. The best rule is the prop bets, of course, have the highest spread. They're sort of like the spreads on the penny stocks. And what they say is, you can't follow this on the computer, but the only way to follow it is with a pencil and paper. Take a notebook and write down how the lines change on the prop bets, and look to see what the trend in and what the last moves in the prop bets are, and then say follow prop line movements. Unfortunately, so take out a notebook the old-fashioned way, write down the current prices, and take a team like Kansas City. They've won 11 out of 12 games, but against the spread, they've won only 4 out of 12 games. So don't bet on the favorite, especially on the Super Bowl, because people like to bet on them. Lean on knowing on the pros and Joes both love betting prop here, but they typically approach them from different mindsets. Average Joes gravitate towards yes, plus money prices, and over. They want to get rich quick. Each of those bets, betting on the over, betting on the favorite, loses more than 52% of the time, which is all that you need to. Now, in the stock market, you might think that if you're right 52% of the time, you'd make money. I think the spreads on sports betting is 5.5%. I think when you get right down to it, the spreads on stock market betting is a lot more than 5.5%. And there are special factors when the public's making too much money. The members get together and they change the rules and make it impossible to buy, and they increase the bid-ask spread. Anyway, I could go on, as I say, what happened today is you could write an opera about. But the tech stocks have been very strong. They'll continue to be very strong because they're at the top trophic level, and they're all with the current administration. And by suppressing the non-woke they're actually helping the current administration. So the market's bifurcated. It's not bifurcated between value and tech stocks. Mainly, it's bifurcated between the East Coast and West Coast bigs that have support from the progressives, and it's bifurcated between that and the rest of the Rust Belt,
Right.
between the blue states and the red states. As I said, I could go on for.
Well, before we go, can I ask you, are you planning to watch the Super Bowl? And if yes, are you planning to bet on anybody during the Super Bowl?
Well, I don't like to gamble, as you know.
Really?
No, I think that when I trade, I always try to trade that I have an edge and I have some statistical grounding for it. And I think the smarts, as I say, the people who set the odds are incredibly accurate. Someone was saying that, how could you predict at halftime the spread on a Kansas City game moved from 11 points to 12 points, and it turned out that was exactly the amount that it changed. They take into account everything, and you'd have to look at trends that the sports bookies don't take into account. And it used to be very hard to place a bet unless you live in New Jersey or Pennsylvania. You had to bring your money to the sports book to get it requited. So it's, big bet there is $500,000 on one team or another, but in the stock market, you buy 10 contracts of the S&P and you're betting $1.5 million. Buy 100 contracts, it's $15 million. So there's a lot more liquidity in the market. But yes, there is, I should say, there's one way that the public can overcome the 52% that they need to win. Buy and hold. And it takes resilience, especially on a day like this. But the market is always uncertain, and the more uncertain it is, the better the future is. Anyway, thanks.
Thank you. And before we go for the weekend, I'd like to leave our listeners with some fun news. First, New York City is giving their residents a Valentine's Day present by planning to reopen the indoor dining at 25% capacity on February 14th. And also, the wife of the former Treasury Secretary, Louise Linton, she is planning to release a self-written and self-directed movie in which she plays a murderous, sex-addicted hedge fund manager. So the life imitates art, or art imitates life. At this point, I don't know.
Okay, well, until next time, have a good weekend.
Good weekend to you.
So thank you very much for your insightful, exciting overview of the market. Goodbye.